U.S. investment bank Lehman Brothers collapsed, unleashing a global financial crisis.
What in the world is happening on Wall Street?
None of these people have a clue of what's going on.
A crash that most experts did not foresee.
Big trouble for millions of Americans.
It was the biggest bankruptcy in history.
In the year 2010, the world was trying to restore balance after the global economic crisis in the year 2008, and the banks were falling like chess pieces. In just 2 years, they were able to bring down more than 300 American banks and impoverish many American citizens. And it was not only America, but all over the world. And at this time, former President Barack Obama assumed power 2 years ago as well, meaning that the period of the Barack Obama administration is the same period of the economic crisis. There were protests and labor unrest in all states of America. And here is what Barack Obama and his administration would do in this case. This photo was taken on Wednesday, the 21st of July, 2010, because this picture is very important because he signs a project called Dodd-Frank. Here we stand with these two men, Chris Dodd, former chairman of the Senate Banking Committee, and Barney Frank, former chairman of the House Financial Services Committee. And this law imposed comprehensive reforms that established strong control over the American financial system with the aim of protecting the consumer and the economy and preventing the recurrence of the global financial crisis again. By setting new financial regulations on the banking system, such as prohibiting some types of trading associated with risks, and specifying some strong items on banks to absorb the largest possible losses for sudden withdrawal of large amounts of funds, and setting periodic and regular checks on the banks in order to bear the worst economic risks. And this is very nice talk, but where is the problem then? And the problem is that Wall Street did not like the presidents and CEOs of American banks because it was reducing their activity and the large number of liabilities. Because of that, when the law was implemented in the year 2010, the Great War began against it, and the Wall Street Group will not be silent on this matter. They set up great lawyers, many, and a group of political pressure on them and companies, and they spent millions on them in order to abolish this law. But they failed in this mission, and here the question is simple: why? And the answer is here, because Barack Obama and his administration were adhering to this law because it is the only guarantee that the financial crisis will not be repeated again. And because of this, when the pressure groups failed to cancel this law, they tried to reduce its strength and unity, and within 8 years they actually succeeded. And specifically in the year 2018, and the result of this success was the new financial disaster that appeared after 5 years, specifically in March 2023, when the first bank, SVB, fell. So what happened in 2018? And what does it have to do with the collapse of American banks, and who's responsible? What brought U.S. banks to the current crisis? And what is Barney Frank's story? After the adoption of the Dodd-Frank Act in the year 2010, all American banks that have assets worth $50 billion or more became controlled, and everyone became committed without any financial deviations. But who would want to get out of the control of this law? Small or medium banks are a large number of bank executives, which are called regional lenders or regional banks. They are pressuring the U.S. Congress by all means to reduce the force of the law and spend millions of dollars on lobbyists. And they bought votes to be able to change the law. One of the strongest banks that issue in the scene is SVB, and some banks that have a crisis of customer confidence in them. And there is a possibility of it collapsing soon. And in the year 2015, Greg Baker, CEO of SVB Bank, stopped him before the Senate committee to mitigate the power of the law on medium and small banks. So what is the problem of this person with this law? Because he said that this law increases the forces and pressure on small and medium banks. And because this law significantly reduces the provision of our banking services to customers. And he also said that these measures will force small banks to transfer their interests to them only without providing any financial services or loans to small companies that constitute business engines in the American market and the American economy in general. Also, his idea was that small banks or medium banks were only the idea that they were small lenders and a limited group, unlike the large, huge banks in the American market. In short, his idea was based on exempting small and medium banks from this law and focus only on large banks, because small or medium banks have no harm except that they are creditors to companies only. During this period, only SVB Bank spent more than $500,000 on lobbyists, and it was not the only bank. Do you remember Barney Frank? Because he is the one who put this law and consumer protection laws in place. The important thing is that he retired in the year 2013, and after retirement, in a strange way, he turned to support change, that is, to turn against the law. And in the year 2015, he joined the board of directors of the Signature Bank, and he became against the law. It means a transformation from the founder of the law to an opposition to the law. And he remained on the bank's board of directors from 2015 to March 12, 2023, after the regulators took control of the bank and the board of directors was dissolved after the bank collapsed. And the New York Times Magazine says that he took $2.4 million in cash and contributed during 7 years to the bank's board of directors. And one of the chairmen who also tried to reduce the force of the law is Harris Simmons, CEO of Zions Bank Corporation, who considered the procedures of the law to be in burdensome federal supervision on them, and that regional banks do not pose any threat to financial stability. And in 2017, he wrote in the American Banker newspaper, if the force of the law on banks is reduced, a large capital of up to $4 billion annually will be available for lending. And in November 2016, Trump detonated the bomb after winning the elections, and only 1 week after his victory, he described the law as a disaster and promised to change this law, and he actually changed it. And in May 2018, after 10 years of the global financial crisis, Congress approved the liberation of small and medium banks from the strong rules imposed by the law. And Trump signed the new law to deregulate the banks and told me that it is really a great day for America 37. What is the new law and what is the outcome? The Dodd-Frank Act stipulates that any bank with assets of less than $50 billion does not apply to the rules governing the banking sector. I am Trump's law, so he raised this limit from $50 billion to $250 billion, which means that any bank whose assets are less than $250 billion does not apply the rules to it, and this is what small and medium banks want. After this amendment, many banks got out of the control of the Dodd-Frank law, and the number of banks controlled by the law became 10 banks only, and the rest became free. The meaning of this statement is that many small and medium banks did not require the following from them to maintain high levels of liquidity: not to comply with the choice of stress, and not to provide periodic plans and talk in case of a crisis. They did not take all these measures that help reveal the problems and defects of the bank. And in fact, with regard to SVB Bank, the first bank that collapsed in 2020, the bank began to receive large deposits in a quick time, from $49 billion in 2018 to $102 billion in 2020. And in the year 2021, it reached $189.2 billion. And in this situation, the bank has huge deposits, and it does not know what to do to lend it. And here the bank SVB do the worst possible behavior, is the purchase of assets with high returns with a long-term maturity date of fixed return. And in the year 2021, the profits exceeded more than 52%. And by writing this, it helped raise the bank's valuation by more than $40 billion. I advise you to watch the previous episode to understand what happened. The strange thing is that no one has been in the bank for more than 8 months in an important and dangerous job called Chief Risk Officer, known as CRO, from April to January. No one has assumed this position after Laura Izurita, the one who resigned, and this period was dangerous because of the great and dangerous challenges. Because this job is the one that anticipates and manages all kinds of risks facing the company or the bank. And before the law was liberated, someone had to be present in this position. But after the law was liberated, it became easier, and no one was appointed. But how did SVB Bank manage a risk in 8 months without appointing a chief risk officer? Even because we do not know. And here, the U.S. Federal Bank intervenes and started to raise the interest rate in March 2022 from almost 0 to approximately 5%. And here's the involvement of SVB Bank. I recommend you to watch the previous episode. Here, the importance of the stress tests that were removed from the bank after Trump's bank liberalization law appears, because stress testing is a computer test that we expect through how the bank will act in different situations. Like the interest rate hike that caused the SVB Bank to collapse. And there is a term called interest rate risk in the Book of Banks, known as IRRBB. Here, we can know the risks of the bank and the profits on the bank's capital. Because of the fluctuations in interest rates, and a term called interest rate risk management, through which I can control the purchase of certificates with different periods. All these tests and tools must be done to know the risks on a regular basis. I advise you to subscribe to the channel to learn more. Thank you.